Taking a look at the earnings scorecard. Joining me now is John Blank of Zacks.com. It's been a while, so great to have you back on the show.
Great to be here, Angie.
It's a big week of earnings rolling in, and you were very focused on the financial stocks, the big banks. How are they performing, John?
Well, here's the thing, Angie. The things that are holding the stock market back are consumer staple stocks for the trade war issues, but the banks are the other thing. They've been shorted down into this earnings report. So the trade right now is people are shorting them into the report. The reports are Friday. Is there really the story going to be that the banks are going to report poorly with this type of stock market? I doubt it. So then what could happen here, we can have some short covering on Friday, and we can have a turn upwards in the financial stocks. So that's the question is this the beginning of the end of the down move for the financials?
So what do you think would be a possible move for you here then?
What I would do, I would wait till after Friday, but I would look for next week and see after the covering happens. If I think it happens that way, then I would probably enter a long position on these banks. And if we're seeing beats and they're the big ones, you can expect more of them to go up, and some of the financial ETFs would be another way to play this trade, go long the financial ETF.
Oh, like XLF, for
XLF.
instance? That would be a big one. All right,
Right.
Why do you think that people turn so negative on the banks?
Well, this is the thing, Angie. Everybody knows about this credit spread collapsing because the Federal Reserve's raising the interest rates in the short end, the long end is staying low. So they bring in deposits on the short end, right? The CD rates, and those are going up, and they're not lending out any more at the higher end, right? So they think the profit margins are being squeezed. Problem with this is banks make money on fees, they make money on all kinds of services, so that's why they're big. They offer this diverse range of services. This could be overdone, this worry, and they could beat, and then you're going to have a turn in this trade.
Recently, analysts did raise expectations on earnings overall. Are you in that camp as well?
I would say no. At this point in time, we've already moved into 20% earnings rate for the second quarter, so I don't think there's any much more lift to this, but I like the idea that there's an outlook effect here, right? That someone's going to tell you that 2019 or these types of stories are not as strong or not as negative as people think. If that's the story that's going to come through, you can get a rally off that news instead.
Okay, so you're a little bit more, what would you say on some of the other sectors? Like, what do you see as strong sectors?
I still like this healthcare services area. I still think you got to like these kinds of, for example, I'll throw out a name, Centene, which is a Medicare uninsured HMO, right? So you got the Obamacare exchanges still out there. They're still growing that business, and it has nothing to do with trade. It has nothing to do with the economy. And you've got 18% earnings growth. Those are kinds of momentum stocks you want to look to. Is anyone you see a stock area that's showing momentum in the last 6 months, it's avoiding this trade issue. We're all talking about it. All these people like me are on these shows talking about it. That means it's priced in. So if you're seeing upward momentum, you're knowing that these are areas that the people are not concerned about. And so momentum's trading right now, I think, on a sector-specific level. It's pretty important stuff.
John, that was terrific. Thank you so much, and come back soon.
Thanks, Angie. Always good to be here.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.